My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends, just trying to make you some money. My job is not just to entertain you, but to educate you and to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. After a calm day, where money rotated back into tech, even though people said it wouldn't, Dow gaining 115 points, S&P climbing 0.74%, Nasdaq pole vaulting 1.67%. You need to understand this week is about one thing and one thing only. It is about earnings. First time it's been like that in a while. Yet this is the most overwhelming week of earnings season when a ridiculous number of companies report at the exact same time. So let me give you the game plan for navigating a confusing, if not impossible to understand period. All right, it's going to start right with tomorrow. We hear from McDonald's, one of the restaurants that can thrive in this environment, right? I mean, I'd be surprised if it wasn't an upside surprise. I'd be disappointed. We get results from Pfizer, which should have a good quarter, but we also want more color on their COVID vaccine. Then there's 3M. They needed to tell a better story than last time, a story about how their safety division's on fire. Their auto business has turned, and China's coming back. Sadly, I don't think you get any of that. Then we have Raytheon, the defense and aerospace company that will give us a glimpse of the broader industry before Boeing reports on Wednesday. I have a decent feeling about Raytheon because CEO Greg Hayes runs a tight ship, but I fear we won't hear anything good about Boeing. I'm concerned about aerospace because we're simply not seeing any travel pickup. Actually, it's come down a little bit, especially now that the rest of the world seems to be getting hit with the second wave of the pandemic. I didn't feel that good after speaking to Gary Kelly, the CEO of Southwest, and he's the best. I'm still worried about all things aero. I was looking for where to take my Christmas vacation. Every place I checked, they won't even let us go. Buzzkill. Starbucks reports after the close, and I think this is a key component of any barbell portfolio, one where you have a balance of COVID stocks and recovery stocks. Starbucks is now scorned as a place that can't handle traffic or lines in the age of social distancing, and that can't capitalize on the rebound in China. I think that's unfair. They're rolling out new stores that don't have seating, and I bet we'll be shocked by the pickup in sales. We hear from AMD, Cramer fave AMD on Tuesday morning, and until their arch rival Intel screwed up, I just saw the chief engineer just quit. I would say own this stock into the quarter, but now it's a stretch because the stock went up by almost 10 points on the news that Intel's screwing up. I am confident there will be enough positives, though, to keep the stock from trading anywhere near back down to where it was before Intel dropped the ball. In the end, I think they're beating Intel on the tech with tons of terrific new generation processors and some great video chips, by the way. All right, the Robinhood gang loves GE, and they report Wednesday. Will they be satisfied with these numbers? Do they understand the numbers? I expect a bit of a letdown as they've got too much aerospace exposure. Oh, don't worry about it. They'll just rotate into Ford or something. Speaking of aerospace, there's also the aforementioned Boeing. I think the CEO will dig himself a deeper hole in the conference call that will be difficult to climb out of. The best thing they can say is that they don't need a bailout. My advice, let the much-beloved CFO do the talking, and please say a good word about American Airlines, which has not been able to lift ever since you said that one carrier might go under. We hear from PayPal after the close. Financial technology is so loved that these guys could deliver a so-so quarter. I still think the stock would rally. If it's genuinely good, sky's the limit. Then there's Shopify. Who else was on to Shopify as early as I was? This is another stock people can't resist. The only time this e-commerce enabler goes down is when shorts push it lower off the quarter, causing befuddled longs to panic. That's your buying opportunity. After the close, we hear from ServiceNow, one of our cloud kings, and CEO Bill McDermott has done a fabulous job of making his company essential to large enterprises. I think it can rally as long as we don't get another wholesale rotation out of the cloud stocks. His old company, SAP, reported a good number last night. Let's not forget Washington. The House is holding a market concentration hearing with Tim Cook from Apple, Jeff Bezos from Amazon, Sundar Pichai from Alphabet, and Mark Zuckerberg from Facebook. I don't think it'll be a big deal, but there's always a possibility that things could get ugly when big tech CEOs head to the Hill. It's really a humbling process. What else? We'll hear from Fed Chief Jay Powell, too. I expect nothing newsworthy, although it won't be reported that way at the time. If it weren't for COVID-19, I wouldn't care at all about Thursday morning. But you got AstraZeneca and Eli Lilly reporting. When it comes to the race for a vaccine, we know AstraZeneca is in the lead. We haven't really heard much about Lilly's anti-antibody strategy, although I actually expect great things from those humble Indianapolis people. And COVID aside, they have a habit of raising their forecast every quarter. I like those guys. After the close, things go crazy. First, there's Facebook, and Mark Zuckerberg has a chance to explain, listen, Mark, this is your plan, to how he plans to create more minority-owned Instagram shops than the Small Business Administration. He should challenge the SBA. It's the right thing to do, and it would also give him some much-needed positive publicity. Honestly, though, public image aside, Facebook's the cheapest way for small businesses to reach customers in their neighborhood, so it should have a fabulous quarter, even though some of the big dogs have left. We also hear from Amazon, Apple, and Alphabet that same night, and I expect all three to disappoint. Yeah, you heard me. Amazon on its forecast because this quarter will be tough to top. Apple on current sales because of store closings. And Alphabet because that's just what they do. What's the reality, though? We heard from Microsoft last week that in their Azure cloud business was actually a little less than stellar. I think they may have lost a step due to competition from Amazon Web Services and Google Cloud. I expect both companies to have excellent cloud numbers. The problem with Amazon is that the quarter is going to be a tough act to follow because now that most people wear masks, it isn't as frightening to shop in person. I almost went shopping this weekend. Apple doesn't like to brag, so they won't pound their chest on 5G. As for innovation, they save that for the conferences. I hope Apple sells off. Maybe your last chance to get in before 5G takes over the world. Even with the stock trading at 25 times earnings, something I predicted based on the strength of their service revenue stream, it might turn out to be cheaper than it looks on a stay-at-home order stuff from the App Store basis. Here's an outrageous prediction. Apple will finally break out the lifetime value of a customer, just like a consumer packaged goods company would do, because they have incredible customer loyalty. Remember, this is all about the razor blade from now on. The iPhone is a delivery system for apps and subscription services, and, Siri, set my alarm for 4 a.m., that kind of thing. As for Alphabet, what can I say? I don't even know what a good quarter from Alphabet would look anymore, although neither does anybody else. The thing that's most disturbing about Alphabet is somehow, I heard on the Skyworks call, every second there are 84,000 Google searches and 85,000 YouTube viewings. How in the world are they not making a lot more money? Hey, maybe keeping kids at home for school will allow them to cheat on Google, and that could drive the numbers higher. Friday, we have Exxon and Chevron, which, that was a joke, which have become a tale of two cities. Exxon was always king to Chevron's pawn, no longer. Last week, Chevron bought Noble Energy. Now it's playing offense. I don't know what game Exxon's playing. Last but not least, Caterpillar reports could be a tough quarter, but they can claim it's all uphill because China and oil have bottomed. The bottom line, is FANG still investable and irresistible? Should we look elsewhere for gains? This is the week that we find out.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.